So I have the honor of introducing our esteemed panel of industry-leading experts. First, we have Daniel Young, founder and CEO of Kingdom Roofing Systems. Daniel and team are a OC Platinum contractor, Mastic Elite, James Hardy Preferred. They've got 3 offices in Indiana and have built a sustainable business by leveraging technology, automations, and by building a team that doesn't turn over. They've seen consistent growth year over year over the last 5 years. Daniel, welcome.
Hey, thanks for having me.
Absolutely. Next, we have Dustin Reese, President and CEO of Gladiator Roofing and Restoration. Dustin's been in the business has been in business for himself for just 9 months and has already closed close to $10 million in revenue. He's got over 10 years of experience in the industry and understands how to take a business from nothing to 8 figures. And I joke with Dustin that maybe it's 20 figures by next year. You never know, right?
Hopefully. We'll see.
There we go.
Thanks for having me.
We've also got, absolutely. We've also got David Miller, attorney, barrister, and solicitor at Said & Little. David is someone who used to chase storms across the country and decided he was going to help fight the good fight for his fellow contractors. And David's going to help lay out the strategy of the carriers and what we can do to stay ahead, to stay on top of that. Welcome, David. Appreciate it.
Thank you very much for having me.
Absolutely. And finally, we have John Dye, owner and founder at Art of the Supplement. He also hosts the American Contractor Show and is a partner of Balance Claims. He's going to show us how to drive net profit revenue on the back end, supplementing side of the industry, giving you the ability to scale your business without needing to make a heavy investment in an in-house supplementing team. John, welcome.
Thanks, guys. Good to be with all these Hoosiers and Tom.
Hey, can I be an honorary Hoosier today? Is that all right?
I think today you're just going to have to be guilty by association.
All right, there we go. I'll have the best internet. I'm not sucking the internet out of Indiana. It's good. Cool. So we'll jump right in here and get started. We've got, I want to say 4 or 5 different topics that we're going to touch on here today. And I'm going to start by, just kind of understanding the lay of the land. What does the environment look like in 2021? We know that, having spoken to a lot of contractors in 2020, a lot of folks saw a pretty good year. We think, 2021 could lead to some uncertainty. We've got a change of the guard from a political standpoint. We've got sort of an uncertain economic standpoint of, what's going to transpire over the next 12 months. We really want to understand, what the strategies are in place for 2021. And how specific to this webinar can you leverage insurance restoration in a down economy or in an uncertain time? So Daniel, I'm going to kick this conversation off with you and then open it up to the broader group.
Yeah, sure. Thanks for having us and putting this panel together. So, every year during the end of Q4, beginning of Q1, most contractors and business owners really start reviewing last year and coming up with a strategy for the following year. So going into 2020, our strategy last year was actually pivoting from a 50-50 split of retail and insurance to a 70-30 split. We've consistently grown our retail division. Part of the reasons that we do that is the cycle time is much faster. And so we've been heavily invested in our retail side of our business. So when COVID hit, we instantly see there become issues on the retail side, and homeowners, we had the stock market basically crash, fire sale of stocks, and people really, what they do is they'll pull back, hold cash, and not want to spend money unless they absolutely had to. And so we instantly changed our strategy in the beginning of 2020 to pivot from about a 70-30 retail insurance split to 70% insurance, 30% retail. One of the benefits, in my opinion, of being multifaceted between insurance and retail and then commercial and residential is as markets get hot and cold, you can pivot your strategy. And so when we're looking at 2021, it's the same kind of a thing. What, Tom, you were talking about, we look at it and we feel that there's a lot of uncertainty. When there's uncertainty, we really want to plan for the worst. And what we know is on the insurance side, it's not dictated as heavily by the market. It's much more dictated by your knowledge and education on working with insurance carriers to get approvals on replacements from wind and hail damage. Some guys are working ice damming and other, floods and fires, et cetera. So all we're really doing is just pivoting our focus and our training, and then also increasing our restoration division, where like this year, we've never ran a canvassing department. We've always generated inbound branded leads. This year for us to grow 75%, again, we know we're going to have to get aggressive on the restoration side is what we're predicting. And so we're hiring 8 canvassers and building a department around that. So a lot of it, again, is we're making some predictions, right? If those predictions don't come to and the retail business is hot, we're going to drive that. But either way, I'm going to prep for the worst case scenario. And we feel like the restoration industry historically has been the best way to drive revenue in a down economy. That's why, that's how guys through 08, 09, 10 housing crisis continued flourishing, was really through restoration.
Yeah, Dan, it's interesting too, and we can certainly open this up to the broader group. But I've had conversations like this with other contractors, and they'll say, yeah, but we don't know if a storm is going to hit. So how do you navigate that of planning for 2021? Obviously, we talked about the economic climate being uncertain, but the insurance side of the business seems to always be an uncertain thing, right? You can't know exactly if and when a storm is coming.
Yeah, so there's a couple of ways to deal with that. So one, some guys are national storm chasers or regional storm chasers. They'll uproot and do buyouts or partner or build a brand in a local town that they've never been in before. That's one. That's not our style. Indiana, we're very blessed. We get hit by high wind, hail, and tornadoes every single year. So let's go outside of that though, and let's look at, say it's a lighter hail and wind event year, which is common. One of the things that we do is we leverage partnerships with companies like Hail Trace. So one of the things that I love about Hail Trace is we can get a map of a region, and we can go back as far as 10 years, and we can see that where hail and wind is overlapping in historical areas, where we might see a city like Kokomo or the north side of Indy or the south side of Indy has got hit 5, 7, 8, 10 times over the last 10-year period. All we're looking for is within the last 24 months, do we have a high or hail event? And we're going to go and work those neighborhoods. Sometimes the best storms to work are the storms that nobody else is working. When I first started in this industry, I literally came in the second year of a hailstorm where all the national storm chasers had come into town, ate up all of the low-hanging fruit, and then left. Well, that left 25%, or we'll call it 20% of the houses left that still needed restoration, and I was the only guy working it. And that, the Blue Ocean Strategy is one of my favorite books, but that's been part of our Blue Ocean Strategy, is work where nobody else is working. If I'm getting 100% market share of even 10% of the market, that's a lot better than guys that are fighting against each other in the same neighborhood. So, most carriers, 12 to 24 months has been my experience. We can file a claim and still get it pushed through. But again, sometimes down years, they've been historically the best for us.
Yeah, Dustin, I'm gonna go to you for a minute here. I know, I certainly don't want to give away any of the great stuff we talked about on the podcast.
Yeah.
But I wanted to understand, you've got a great strategy. Now, you started in business in March, and as you said, the hail diamonds rained down from the skies. But
the next within 12 hours. Yeah.
Right. So you had a good strategy of, some folks like to wait until homeowners are home, and you recognize that, hey, during the day these folks are at work, so why not go where they work? So if you could maybe just talk to us about that strategy of approaching businesses.
Yeah, so we touched on that last week, but yeah, we basically started going into commercial buildings and speaking to them. I think a lot of commercial buildings, as long as the data loss, I don't think experience. I guess it depends on the insurance provider, but we would go in and talk to, you know, the employee, go inspect their residential roofs as well.
Great. You broke up a little bit there, so hopefully we'll get a better connection. But David, John, anything that you two wanted to add to that? I imagine, like, for both of you, when we're talking about you know, getting legal assistance involved or supplementing, both of those don't happen, like, you know, at the time of damage. These are both kind of, I would imagine, events that take place at some time later. But anything that you two want to add to that conversation?
Yeah, go ahead, David.
Well, legal, I'm usually the last stop in the road. When you've gotten the door slammed enough times, I'm the one you guys come see. And unfortunately, in Indiana specifically, in a lot of states, statute of limitations matters most. So if you're taking the approach like Dan outlined, which is coming in after the tail end to get all the neighborhoods that weren't picked clean, the statute of limitations is your worst, because you're running against the clock. You've got limited time for John to actually get in and work and get the supplement that needs to get the claim where it has to be. And again, it's the strategy going forward for a lot of guys, I really think, has to be not leaning so heavy on the supplement, but writing your own estimates, knowing your own costs, and not leaning on Xactimate, because Xactimate's not a fair pricing.
Right.
So you're going to come in to say, just taking a hard line in the sand with the carriers and say, here's my number. Here's what I have to make. This is an Xactimate. This is bid pricing. That's how this has got to work. And coming up against that kind of hard number-esque approach can push the statute of limitations, because once 2 years hits in the state of Indiana, most states are 2 years. Some are like Colorado are 3, and every jurisdiction has different statute of limitations. But once that statute of limitations hit, the insurance company doesn't have to do anything, because they have no fear of litigation, no fear of suit. You've got nothing left to do. So it's one of those things where contractors aren't PAs, but you have to be cognizant in your state of where that line is, and know to salvage a claim, you have to be ready to bring in John to try and fast track, or final step, a lawyer to assist those homeowners to actually get everything across the finish line.
Yeah, I totally agree with David on that for sure. And one of the big things that I think is important to understand too is, you know, we work in 41 states, I think, last year. And we watch how these trends move across the country. Whereas one area like this year has been really big in Indiana and like South Carolina, and then down in Louisiana and these other areas. Texas is always every year. But then you got markets like Colorado where they haven't had hail for the last couple of years. And so it shifts so much and it varies so much. But, you know, one of the things that we really push here at Balance is getting people to getting contractors to understand, like, having that in-house department is so important. Understanding the process is so important. The better that the better that contractors understand what actually goes into supplementing, the better they are to be supplementing clients. And what I mean by that is, if you look at Art of the Supplement, what we did there was building a training platform, and Balance acquired that training platform because of the fact that we like working with clients that do it in-house. We like working with clients that at least do some of it in-house. We like to be the overflow for them. And what that allows us to do is we get better files, we get better results. We like clients that understand. And using Xactimate as an example, David said, you know, using the stock numbers in Xactimate is not the way to go, but understanding how the components tab works and understanding how to get in there and actually make those numbers work for your business, that you know what you got to make. It makes it so much easier for us to then step in and actually do our job effectively. If a client doesn't give us the right information, or they just say, hey, look, just here's the claim, do your magic. Well, my magic is based off of Xactimate numbers at that point. There's no magic there. We're just going to work the numbers as they are. But if you come back and say, here's a bid, here's this, here's what we actually paid. And a good example is OSB this year. All of you guys know, Daniel, Dustin, OSB went crazy this year, right?
Yeah.
Went insane. Did Xactimate keep up with that? No
Nope.
way. There was no way. But the contractors that knew how to go into components tab, change that item price to the correct price, then send it back to us and say, here's our actual price for OSB. Now we have a leg to stand on. Now we can actually get you paid for all the work you do, so you're not going out of pocket. Otherwise, you are going out of pocket. That's the bottom line.
Tom, I want to do a shameless plug for you guys here. So one of the things, so I've been talking with David. David's our attorney. He's the attorney for most master elites and platinums here in Indiana. One of the things I did was I contacted him 2 years ago, and we started discussing the strategy around cost incurred. And my interpretation, my knowledge, David can correct me if I'm wrong, the spirit of an insurance policy is indemnification, and it's really about a homeowner or a policyholder going and finding a vendor, getting a bid, signing a contract, and then the carrier is reimbursing that policyholder for that approved claim. Well, what I really asked David is, hey, if I start using our retail numbers in insurance, I'm even willing to post my retail numbers on my website so anybody and everybody can see them. Do you think that this is a strategy that we can start really leveraging cost incurred? And he felt comfortable with it. So we tested that last year. And what we've done is we've built out our retail price database in Leap. And now we have good, better, best. And then we even built one based off of like, kind, and quality, which is what insurance carriers are looking for. So I have a 3-tab estimate. I have a dimensional shingle estimate, better and best. So when we meet the carrier, we can literally hit download on our hover. It auto populates, does all of our waste calculations right into Leap. And I can pull out 5 different estimates in the click of a few buttons. I hand it to the carrier. What I've done is I've established my price. And what I have found is it's much easier to say my price is $20,000 and then come back and say, well, we're at 14. I'm saying, well, you got to get close to my number. That's a whole lot easier for them to say, all right, if I can get it up to 19, we close this file out. Yeah, absolutely. It's way easier in my experience to get them to talk about my estimate instead of me saying your estimate's garbage. I need you to add this and this and this and this line item. And our experiences is we are turning those files a lot quicker, and that gives us a starting point of us establishing this is our number, this is where we need to be. We've actually found it to be very effective. What we found more than not is not that they accept our estimate, but they go back and they work a whole lot harder to get their Xactimate estimate closer to our retail estimate. Now, the problem is the industry as a whole is that contractors have all adopted carriers' ways of estimating a loss instead of us just standing and saying this is our price, it is what it is. As long as we play their game, that's going to be the rules that we have to live by. But as a whole, if the industry will begin to shift and all contractors start establishing price databases and saying this is my price, what I believe we'll find is cost incurred will be much more effective moving down the road.
Yeah, you're right. Cost incurred is huge. And the biggest thing though too, I think, Daniel, is getting your customers involved in that process too. To buy into the fact that this is what it would cost had I just been buying this roof outright, this is what I would pay no matter what. And that's, I think, the other side of it too, is contractors have been on the flip side of that, where they felt like almost like claims were a windfall because they weren't looking at the numbers the right way. Nobody really knew what their overhead was. Nobody really knew what their profit margins needed to be. They were all running these businesses where it was just like, oh, I'm getting 300 a square. Good for me. Let's move on. And it was like, that's not the right number though. It's a complete, that's exactly where the carriers, I think, wanted us to be as contractors, to think in those terms and not think in the terms of what does it actually cost to run a business. And that's the bottom line.
And it goes back to, and this is, I don't believe there's any confidentiality with this or not. We have a class action against a carrier, and in the process of that class action, Xactimate was a key discussion. The reason why is everyone uses it. Problem with Xactimate is when we took the vice president of Xactimate's deposition, we asked him, how do you come up with your pricing? Well, we do market surveys. Oh, do you contact your warehouses, your ABCs, your Lowe's, your Home Depot? Do you contact contractors still like you used to do 20 years ago when I was still a contractor? Response is no, we don't do market surveys like that anymore. We just contact different insurance companies and see what they're paying and build it around that. So Xactimate can't even be trusted anymore to truly market survey.
Yeah.
Because they're just wholly based around what insurance companies are willing to pay, not what it actually costs to do something.
Well, there's a little rumor around that too, David, and part of it too is kind of on us as contractors, and this is something that we're trying to work on at Balance. When we edit pricing, what ends up happening, let's say you write an Xactimate, right? If anyone here is familiar with Xactimate at all, let's say you write an Xactimate, you print it off, and what ends up happening is you end up leaving that Xactimate in like an open state, okay? Like you never close the estimate. If I'm an adjuster, when I was an adjuster and was doing claims down for Irma, anytime that I finished a claim, I had to hit complete estimate, close it out, go through all the check marks, make sure that it was completely done. And what actually happens is what I've heard from Xactimate trainers is once you actually hit the complete estimate button, then it sends that data back to Xactimate for them to actually include in their database. We're not doing that as contractors. We're working on that imbalance in our estimating department to make sure that we hit that estimate department, complete estimate button, so that it goes back to Xactimate and reflects what we're actually billing clients and what we're actually asking them to do. But that's a big part of that too, is we're not giving them that data. And yeah, you're right, they're not asking us for it, and that's by design as well. Absolutely. But we're not even giving it to them by just taking that one little step, because we really don't know how to use the software effectively. Such a small number of contractors are actually certified in Xactimate to understand how it really actually works. But you get deep into it, it's a powerful program, but it's not designed, we're just not using it effectively for that particular purpose.
And you probably are 100% correct, and that is how they're mining data, because they're not doing market surveys like they used to.
Correct. Yeah.
It's just not.
I mean, in 10 years, we've never been called one time. So I'm confident that they're not doing that. And the other platinums and master elites I've asked about, they've never received a call.
Okay. Yeah.
Right.
So we'll certainly continue this discussion as we go along, but I want to make sure we can touch on everything here. So Dustin, I see you're back with us, so hopefully the audio connection is good.
I keep losing connection.
All right. Well, hey, listen, I'm going to start with you on this. If we lose connection, no worries. I know, Daniel's definitely done a great job of scaling his business as well, but wanted to start with you. You started in March. We mentioned this. A couple of nice, hailstorms came by, but you grew that business from nothing to, just shy of $10 million in a year.
9 months.
What was that like?
Who's counting?
9 months. Yeah, right. 3/4 of a year.
What was it like? Stressful.
How were you able to do it?
Tell us what this was like, Dustin.
What's that?
Tell us how this all went, because this is crazy.
I mean, I really have to give credit to my team. Couldn't have done any of it without them, but we all have, I think a minimum of 10 years of experience each. So everyone knew what to do, and we had a few hailstorms like we talked about, and just grinding. I mean, did a lot of door knocking. I think being organized. We had a CRM. Obviously, we use Job Nimbus. So I just think having the right people and just 16-hour days nonstop.
Dustin, we talked about this briefly, but I think it's always neat to know, as a new company, you're kind of facing an uphill battle, right? There's other contractors that are well established that are trying to sell against you, right? And you're able to go out there and be really successful. What do you think it is that you did that instilled confidence in homeowners to go with you and to trust you with replacing their roof?
Well, I think it was kind of a perfect storm with the pandemic and everyone being home. We would go into neighborhoods and to look at one roof, and we'd be on 20 roofs before we left the neighborhood. So I think that played into it. I think marketing also. We didn't have any reviews. Nobody knew who we were, so it was kind of against all odds, I guess. So, but once we started completing jobs, people could see what we were capable of, and they just trusted us.
Hey, Tom, as a competitor, can I throw a couple things I see from the outside?
Please.
Yeah, so me and Dustin are in the same market. We've known each other since we were 4. And I've watched him from the outside, and as a competitor, I see some of the stuff that he does really well, and I think contributes to his success. So one, I think Dustin he understands the art of attention. He follows a couple of guys that are huge on that, and the things that Dustin does really attracts attention, especially on social media. And then the other thing that I've noticed about Dustin from the outside is, at 5 a.m., he's posting pictures of supplements that he's writing, and at 10 p.m. he's posting pictures of him in the office finalizing, doing emails, and 7 p.m. he's posting pictures of him out producing jobs. So the dude works like crazy, 16-hour days, like he said. I've seen it on social media, and I think one of the things that the beauty of the industry is you can have a crazy background, made a ton of mistakes, clean your life up, get into the industry, and do very well for yourself. But the other side is people also look at somebody like a Dustin or a Bone Dryer or whoever and think that they're living a dream. No, absolutely not. It's hard work. It's a freaking grind, right? Like, these guys have put in the time, they've taken the risk, they've put their life savings in, but there's high risk and high reward. And if you leverage things like Leap and coaches and consultants and supplementing companies, and you partner up with the right people and you hire great people and you develop your own team, you're going to have this, you can have similar success like Dustin, but that stuff's not handed, right? Like, that dude worked his butt off, and then he turned around and put his life savings in it. And every time you turn around, you see videos going viral, and he's doing selfies. He's always promoting the brand, right? And then he's got a fleet of wrapped vehicles, that has a very thought out, well balanced brand that grabs attention, right? And that's a huge deal in our market. Is we've got a ton of competitors that do it really, really well. You've got to set yourself apart somehow. So that's, speaking for Dustin as a competitor looking from the outside, he's doing a lot of things really well. And that just gives you an idea of, what the opportunity is if you're willing to do a few things really well.
Yeah, that's really great. And Daniel, I know I just saw, I think you're celebrating 10 years, Kingdom is, and love to talk. You mentioned it briefly about, you two are competitors, but I know there's a lot that goes into the camaraderie that you all have. And, there's more to it, the thought behind, what is it? Rising tides, lift all ships. And
Yeah.
I'd love to just understand, like, how do you work well together with a competitor to, raise the bar in your market?
Yeah, so there's 3 or 4 things I can probably hit on there. Is one, I think you have to determine what your vision and your mission is. So if your vision and your mission is about making as much money as possible, you're probably going to die pretty miserable, right? And the people, one of the things so we're part of Habitat for Humanity. We do a ton with them. They actually just sent a market survey back to us. Is 87% of all consumers are more willing to do business with and pay more to align with a contractor that is philanthropic in nature. So what's that mean? People that are willing to help each other and have a bigger mission and vision than just money oftentimes are a lot more successful, because the community will get around them also. So for us, our vision and mission is not about making money first. It's our first vision and mission is about helping our team, helping the industry, teaching people, coaching them, and developing so they can hit their dreams. And in return, when we help other people hit their dreams, the law of reciprocity enacts, the law of sowing and reaping enacts, and we're in return blessed for it. So that's one. Two is we've actually hit so many storms because our strategy is to hit rural communities, small towns, and we've literally had 2 and 2.5 inch hail where I didn't have enough people show up. There was literally 2.5 inch hail that was busting windows, and you have people on the street that had no idea hail hit. Why? Because we're the only person there. Sometimes there's synergy in having 3 or 4 competitors across from each other with yard signs on every stinking drive. So the homeowners absolutely know that there was damage there. They're not questioning or wondering. So the other thing is, I believe that our industry has so much opportunity to help consumers and help the people that are part of the industry. And so our vision is just bigger than our bank account. And at the end of the day, I've also have coaches and consultants that have poured into me. I've reaped the benefits and rewarded that. So some of it's just paying forward. And then I've known Dustin for, God, 32 years.
Yeah.
You know,
Yeah.
we've been childhood friends. We used to chase around each other on bicycles and do bad stuff together. Like, there's history there. I want him to win, right? And man, there's so much out there. Like, there's so much damage. There's so much work. I can't get to it all. Why would I not want my friends, the guys that are doing it right? Like, that's the big thing. I want my good competitors to win. They give our industry a good name, and they can get to take care of their family, everybody that their circle they're attached to.
Yeah, I appreciate that. I want to, we'll keep this discussion moving. John, I want to go to you here for some advice. You mentioned it earlier when we were talking about supplementing, but how does that help a contractor to, continue to drive profit ahead of, just staying busy?
Well, it's vital to their success, and I'll hit it from the adjuster's point of view for a second, because that's kind of where I really was opened up to the supplementing side of this industry. I've been supplementing since 2010, and doing it for a lot of contractors all over the country. We were just basically chasing, trying to get things paid for, but we didn't understand why those things are even left off to begin with. In my mind, in any other contractor's mind, usually is because, well, adjusters are just dumb and they don't know what they're doing, and it's just, they're just trying to lowball everything and blah blah. And there's some element of truth to that, but there's also an element of they're not there. It's weird. So when I went to Florida, it was after Hurricane Irma. I went down there with a couple friends, and we decided to become emergency licensed adjusters after the hurricane. So we get out there. I'd never adjusted a claim in my life. I get thrown on some roofs. They actually gave me 300 claims. I kid you not. I had 300 claims in my inbox, and they said, go to work. And I was like, I have no idea what I'm doing, right? So I'm hopping on these roofs just thinking of what I would do on an adjuster meeting, taking photos. Florida's super cool because you only got to have 25% of the roof. It's really easy to get bought. No need to worry too much about, if it's approved or not. But when I turned in my very first estimate to the carrier, I had everything in it, and I was getting paid on a tiered scale. So the higher the claim, the more I was getting paid, right? So I'm trying to make sure that everything is included in this estimate. I turn it into the insurance company, and they kick it right back to me. And they said, John, did you not read the guidelines? And I was like, I have no idea what you're talking about. And they're like, well, we sent you an email with guidelines. It's like, first off, I didn't get the email, or if I did, I didn't see it. But regardless, I'm like, what is a guideline? So they send me this email and this list of things. Okay, and it's page after page after page of what I can and cannot add to my estimate. O&P, starter, ridge cap, all the things, how I'm supposed to structure this estimate, how I'm supposed to write it. Okay. And so then I started to figure out, okay, so this is the game that they're playing. And I was ticked. Okay. And so I tried to back out, but they were like, hey, yeah, you can go home or not do all these claims and not make any money. So I was like, well, I'll stay out here and do it the way you're telling me to. And I started to build macros and templates and all this stuff. Well, I started to understand the whole process. And I look back in the history of not just my career, but balance, and look at some of those stuff. On average, across the country, in some areas it's higher, some areas are lower, but going apples to apples, just in estimates, they're leaving off systematically around $2,500 per roof replacement, okay, on your average claim. So think of the math for a second. If you had 1,000 claims, which Daniel, Dustin, anyone that works in this industry, David, 1,000 claims is like nothing, right? But 1,000 claims, and you systematically can take $2,500 off on 1,000 claims, that's $2.5 million that the carriers just saved, right? Now multiply that times the hundreds of thousands of more claims that they handle every year, millions of claims that they handle every year. The number is outrageous, but we're just talking about 1,000, which is a drop in the bucket. The percentage of contractors that go back and don't take that settlement is so low. We figured it. I've talked to Steve Patrick. I've talked to my buddies about this, other people that do exactly what we do. We figure that about 20% of contractors are the ones that actually supplement or actually understand what they're doing in this industry, or as far as the money goes. The rest of them are taking that. So that means 80% of contractors are taking that money. So if 20% are actually going back and getting their $2,500 per claim, that means that on 1,000 claims, that's only $500,000. The carriers just saved $2 million on just 1,000 claims. This is a game. Okay, this was designed to give that homeowner a low ball offer in the beginning, and they know that the odds are they're going to take that, and they're going to somehow magically, there's going to be some contractor chucking a truck, or someone's going to show up and do that job and make, somehow figure out a way to make it work for their business. I don't know how they do it. I've seen a lot of businesses fail because of this mindset, but yet it happens, right? And you got to think, everyone thinks, oh, well, we're getting 300 a square. That's really good. This is awesome, right? How long did it take you to get that $300 a square? How much effort did you put into it versus going off and doing a retail job and going with the leap estimate, showing up, getting someone to pay for the roof, finance it, whatever? You're in and out of that in what, Daniel, 2-3 days?
Yeah, the ideas were there for about a 2-hour demo, one call close, we finance it. I build the roof next week and I get paid for it in 24 hours.
You're in and out.
That's why we shifted to 70% focus on retail, because of
Which
the
is
time of insurance.
It's brilliant. And most contractors, though, it takes them a lot of time to understand this. And on the flip side of that, though, how long does it take you to get an insurance claim to go through?
Very common. We're 3 to 6 months cycle time. Very common. If it goes to a PA, which some files have to, I've got
Or
files
appraisal?
24 months. Yeah, appraisal, and they're super expensive.
Exactly.
You're giving up 10, 12% most of the time of the actual total revenue on that file.
Your cash flow is completely different. It was really funny. I had an epiphany, or I had like a moment where we were at an event in Nebraska last year. Feels like forever ago. It was last year though. And we talked a little bit about Chuck Tokey, and Chuck Tokey's a huge leap guy. It was funny. We were sitting at a house in Breckenridge November, and he pulled out Leap and started put us through his sales process with Hunter Ballou and I about pulled my credit card out and said, I don't even know where I'm putting this roof, but I want to buy it because this presentation was so great. But he came to my event and we were talking. I knew he was there. He was hanging out with us, and I asked the class. I said, there were probably 30 people in this room, and I said, hey guys, how many of you guys actually do better on retail than you do on insurance? The number was staggering. People were just like, oh, I make so much more money in insurance than I do on retail. And I said, okay, every single one of you need to meet Chuck Tokey right now. Chuck stood up and said, I said, Chuck, how much do you get on average in retail? He's like, I'm in the $600 to $1,200 a square range. And everyone in the room just looked at him like he was a ghost or something, like he was an alien from outer space. How does this guy even exist? And I'm like, this guy is the guy that built a business to $180 million a year. This is why this stuff exists. Like, this is how this works. And everyone thinks that that's the problem, is everyone thinks insurance it pays more automatically, but it doesn't. When you actually know your numbers, when you actually break down what your margins need to be to stay in business, what you're actually doing, what your overhead is. Dustin, I know that having trucks is not cheap. I mean, I know what it costs to wrap a truck. I know the expenses that go into building a business, having those offices. Daniel, you've got 3 offices, you have trucks, you have all kinds of other stuff too. To build a business to be sustainable for years to come is not in the playbook of insurance companies. Insurance companies do not want you to make more money because they want to make more money. If they're paying you more, that means they're making less. Okay. And you look at what we do here at Balance, like we have thousands of claims that come in the door every year. I think last year we had a little over 10,000 claims that came through in 2020. Okay. We work these claims day in and day out, and we're barely scratching the surface. If we cost the insurance companies a few $100 million, that's still not that much money at the end of the day. And David could tell you that too, if he understands that part of the business as well. Supplementing is so important. If you're taking that insurance company's offer, you have left thousands of dollars on the table, not just thousands of dollars on the table, but you have cost yourself money that could potentially cost you your entire business. If you don't know how to supplement, you will go out of business over time. There's just no way around it. You cannot afford to scale and build a business. You can maybe keep a small business going. Maybe you're only doing 10 roofs a month. Okay, maybe you can stay in business doing that. But if you want to scale and grow and go to the next level and learn how to compete with guys like Daniel or guys like Dustin, that's the only way you can do it. Bottom line, it's a necessity. This is not a luxury. This isn't something that we're just out here trying to see what we can get out of the insurance companies. No, it's about cost incurred. It's about, what did you actually do? Did you just do a whole bunch of work for free? Because if you're not supplementing, that's what you're doing. So we're passionate about it. It's what I do. That's what we focus on here at Balance. There's 40 people sitting right outside this office right now that are just doing that task for contractors all over the nation. And so it's a really important thing.
Absolutely. I appreciate that, John. Kind of piggybacking onto that, David, I'd love to know if you can help us understand, what are some of the, changes you see maybe coming down the pipeline? How should contractors navigate those? How, what else should they be aware of relative to policy changes and things that you're seeing? I know, obviously you're in Indiana, so, that's where your predominant domain is, but love to know, kind of your take on what you're hearing or seeing.
Well, a lot of it comes back around to what John was saying. It's all about something you might have left on the table. Every state has different rules, especially for contractors, about how they can communicate with insurance carriers. And I tell every one of my clients the same thing. Don't negotiate the claim. You're not a PA. You're a contractor. You got to come up with what your hard number price is and write it. That's it. And every insurance policy is an obligation of indemnification. They owe to replace it. If they can find somebody to do it for $10 instead of $100, that's what they're going to do. And it comes back to the old insurance line of delay, deny, defend. The insurance companies are built on people not understanding the process in which they're obligating. And every contractor has to be the master of their business. They got to know exactly like Dustin and Daniel knows what's their overhead. What is their amount of money to stay in business? First year I started, full year, was the 06 hailstorm. I sold about $1.2 million, about $1 million, I think, if I remember right. Another salesman that was there sold $1.5 million. I had a higher profit margin on mine because I actually went through and wrote the estimates the way they were supposed to be. This is back when you actually hand wrote an estimate. And his profitability, he actually ran negative when he looked at his final year totals because he wasn't paying attention. He just, okay, that's what the insurance is paying, sign the dotted line, we'll do it for that. And you're never going to be able to make a sustainable business doing that. And the way the insurance companies are changing, they're adapting quicker now than they were 5 years ago. They're adjusting to trends that they see and applying it. There are certain carriers who are changing the appraisal language in their policies in Indiana because they've learned to, they've come along to the conclusion that they're losing that argument because that position is being taken advantage, it's being used by insureds in the state. So every state has got a different, I guess, synergy with the different carriers and how they're going to function and go forward. But all of it comes back around to is they're always going to be moving the goal line on you. And it's best not to play their game, not to chase your tail with them, but instead do the same things that John and everyone on this panel does, whereas you come out with your hard number. What is your price? And not argue with them on coverage. You're never going to win that. You argue with them on, this is the building code. This is what I have to do. This is what the manufacturer says has to be done. The damage, anyone can point to damage. Hell, I don't give a crap if it's next to a golf course and you have golf ball hits. That's still damage, covered damage on any policy, whether it's vandalism or something else. It's something the homeowner didn't intend. So you can get lost in the weeds on arguing damage and everything else. It's better to say there's systematically enough damage on this. The manufacturer says not to mix shingles. I'm not going to go out and spot repair because the color's not going to match. These are arguments you can make and sit there and say, this is my hard number price. They signed a contract for me. Are you telling the homeowner to breach their contract with me? Because if you're going to do that, you can put it in writing to them so that we can forward that on to people above, us that can deal with that. But an insurance company can't sit there and tell you who to use. So I think it's best as a contractor going forward is simply making sure you stick to what you know the best, which is going to be your building installation, your building materials, and how the process works, and not argue policy coverage one bit because you're not a PA. I mean, John, you might be a PA now. I don't know, but I mean, you still are arguing the same thing that we're instructing them to do, which is know your hard number costs. And as long as you guys stick to that and not play their game, your life is going to be a lot easier, as Dan found out.
Yep.
Yeah, that's great. As we move along here, and we got about a few more minutes here before we open up the questions. I've already seen a lot of good ones come in. So, Daniel, I want to give this slide to you and talk to you about or get your take on leveraging technology, growing a sustainable business, and focusing on building a brand that does not have to depend on purchasing leads.
Yeah, so we've had a couple of these webinars where we've spent hours plus on this, so I'll have to kind of hyper drive through. So about 4 or 5 years ago, we hit a brick wall, all in all. So as a startup, we basically put $2,000 in and never reinvested, and we cash flowed the whole thing. What ended up happening was we cut corners in QuickBooks and we cut corners on overall data and CRMs. Both of those, what we found out was it would have been a whole lot cheaper to set it up right from the beginning. So about 5 years ago, as we were scaling, we spent the first 5 years, a lot of our decisions based off of what we thought was right or wrong or accurate or not. And at the end of the day, data is the only thing that is in stone. Everything else can be, you'd be shocked at what you find when you really start tracking hard numbers. And making pivotal changes based off of the numbers that you're getting back. So the stuff that we use, is obviously we're using Hover and Eagle View both for measurements. That's, I feel like that's 101 for the industry. On estimating, I would be I think we would all be shell shocked to find out, one, how many restoration contractors don't even know how to use Xactimate. They just go off the carrier's estimate, maybe ask for a couple missing line items. But two, alternately, how many people set up a leap and actually come up with their own pricing database? And I can tell you how important that is. One, when you hire on a new sales guy, it's extremely important to get them out in the field, signing contracts, driving revenue, and getting commission checks in their hand. That's how you're going to retain your sales guys. And when you have this ultra complicated process trying to teach a rookie how to use an Xactimate, good luck. That guy is going to hit a brick wall. And typically your best hires are rookies that are really high quality, very smart, have a passion, and they have an aligned vision and mission. We need to get them out in the field closing deals. And so when you can set up a template like in Leap that has pre-built retail rates, and they can pump out an estimate in 30 to 60 seconds, you're a lot more likely to retain that sales guy. And I can also tell you, we've learned the hard way, simplicity is key when you have a team. It's great that I can write an Xactimate, but if my team can't, it doesn't matter. It's all about what level does my team operate at. So using an estimating program like Leap that takes all of these different keys of the overall demo and contract signing and financing and piling it all in one place makes everybody's life easier. From a data side, your CRM really is your hub. It's your home base. It's the heartbeat of all your data. Everything should flow through there. We personally use Job Nimbus. I really like it because it's very easy and simple to use, which is vital for your team. It's inexpensive compared to others. Most of the time you can get it for $25 per user. It integrates with companies like Leap, Job Nimbus, Eagle View. They have hundreds of partners, plus they have an open API. So if people want to do customizations, they can use the open API to do that. But we build out dashboards. We know closing rates. We know average job size. We know NSLIs. We see no demo rates. We see it all. I have got dashboards for days. It would make most people's heads spin, but we use that data to steer our ship. And back to what these guys were talking about, when I audit the people that I know in the industry, what I hear net profit dollar wise, most guys are making 3 to 6% net on total revenue at the end of the year. They don't understand truly their overhead number. And when they see jobs that are 30% gross profit, they're high-fiving. And I can tell you guys, most retail home improvement companies are operating at 20 to 30% overhead cost, a true 20 to 30%. But by the time they do the job right, and the key is you have to charge your customer enough to do the job right, or you're not going to stay in business. So let's say this guy, is not using a CRM he thinks he's going to kill it at the end of the year. He makes 3 to 6%. He didn't supplement. Well, guys, think about just a 2% supplement. If it's a $10,000 job and you add $200 to the job, just $200, that's 2% of revenue. That 3% net profit turns into 5. Guys, that's a 66% increase on net revenue. Well, you won't know that if you're not using things like QuickBooks and your CRM properly to actually track the numbers. At the end of the day, who cares how many shingles you sold? Who cares how many roofs you put on? If you're not making any kind of money to take care of your family, take care of your employees, and give back to the community. And lastly, I think everything, Marcus Lemonis is somebody that I follow. Everything's about people, product, and process. Your team is first and foremost, should be your number one focus. Your product, you've got to decide what products you do sell, more importantly, what you don't sell. You know, I started off in roofing and siding, and we ended up doing kitchens and baths, and it about sunk our battleship. You know, the more times I say no, the more profitable I end up being at the end of the year in general. And then process, you know, we have heavily focused on the customer journey, and then we've mirrored that customer journey inside of our CRM. And then we assign every step of the process to one of our teammates. And then we, like I said, we digitally mirror it inside of our CRM. So that, I mean, that's a quick 5-6 minutes. I can spend hours on technology. You know, we're 41 employees, and we have 2 full-time IT because we're extremely invested. And I believe that companies like Dustin that go from 0 to 10, they're going to do it on the back of technology long term. And that's how they're scaling, is because technology makes people efficient, effective, and scalable.
Yeah. Daniel, I appreciate that. And like I said in the intro, you know, Daniel and I had a great podcast episode, so I'd encourage you to go check out Leaps and Bounds and find his episode, and he can share more of it, or where he does share more of his thoughts. As we wrap this up, there's a bunch of questions here. I don't know that we'll get to all of them. I do want to launch a quick poll. Let's see, there we go. If you're interested in learning more about Leap, let us know. If you already use Leap, thank you. And just for having a conversation with us, we are going to send you a free a gift card for lunch. So that's on us. You know, and if it's a good fit, great. If it's not, no problem there either. But I think it's always good to have conversations with others to, you know, bounce ideas off of, kind of get an assessment of your business, and learn what's out there. So I'd encourage you, you know, to do that with a lot of different things that the guys here have mentioned and talked about today. And I do have our AirPods winner here coming up. So let me go ahead and close this. And if you have a question, please write it in there. I know there's already, you know, quite a few in the queue here, but if you have any questions, please get them in. I'm going to go ahead and close this poll. And let me see, moving my next slide here. The AirPods winner is Thomas Besh. Great, thank you. I'm just kidding. Daniel Eldridge is the AirPods winner. So congratulations, Daniel. Somebody, I think Kelly will reach out to you to get your information to be able to send those to you. Q&A. All right, so yeah, we've got about 2 minutes here, and I just want to be respectful of everyone's time. If you guys have some time, you know, you're more than welcome to stay on, and we can go through some of these. If not, we'll try to get back to folks afterwards. So let me go here. Quick question. Question for David. It says, how liable is the insurance company to pay for code items like starter and ridge, and say they, quote, we don't pay for those?
They can't really say that, especially and this comes back around to knowing your business, and the building code is, does the manufacturer recommend not using those on the roof? If the manufacturer doesn't recommend it, they owe for it. I don't know any roof that I've ever put on when I was a contractor, or any claim I've ever worked since, that didn't require starter and hip and ridge. Like, I mean, I guess you could do a layover, but why would you do that? It's not how the manufacturer instructs doing it. It's simple thing is, if you're a master lead, if you're any the platinum preferred or any of those guys, literally pull out your field manual, scan it, send it to them, and say, if you're saying to do this, then why am I not allowed to do it? And they don't claim that it's a waste either. Like, oh, you can just cut 3 tabs and use those. No, you can't. That's not what the manufacturer suggests doing.
We have a tool we use for that too, David. We use Restoration AI. I don't know if anyone here uses that at all. It's actually Mark Craney, a guy here in Indiana that built that. It's restorationai.com. It's a really cool waste factor calculator. It's like 6 pages long. It's like $10 per at the high end, it's like $10 per report, but it gives you a 6-page long waste report and explains why you can't do that and what the actual true waste is on the roof. So if they say, well, this is because they say what a hip roof is 15 or 12, complex, not complex versus whatever, it gives you like, it's going to tell you this roof is 14.26% waste, and this is the exact numbers, and then plus ridge cap and starter. And if they say, well, they got included in the waste, well, then your waste factor now becomes 36.72% or whatever it is. It'll break it down based on the measurements that you give it. It kicks it right back in real time. Takes like 5 seconds to build one of these things. So
Yeah.
That's great.
So,
Appreciate that, John. I'm going to try to get through just a few more of these here quickly if we can. I've got another. Alex wrote in. So a contractor doing $1.5 million a year, should they focus on or double down on either restoration or retail, or continue to do a mix? And he follows that up with, what do you recommend for those in that $1.5 million mark, trying to get to 3 million and eventually 5? Where should their focus be today?
Tom, I can hit that because we really focus on both. So one, I think there's a ton of information that you got to dissect there, what type of market you're in and what kind of capital you have. So as you're transitioning from insurance to retail, there's some basic things that you can do that are inexpensive long-term. But if you're really building a brand and you want to focus on retail, it is front-loaded with energy, resources, and money, right? The biggest thing that I think that you can do is start leveraging the low-hanging fruit, like Google My Business, getting Google reviews, wrapping trucks, and just branding everything that you can. I really recommend reach out to Mark Levask at WebRunner. Those are great guys. They will help you dissect your business, your situation. There's not a cookie cutter answer here, right? But if you're wanting to scale from 1.5 to 3 and you're wanting to mix in some retail, you're going to have some capital and some time that you're willing to put into it. But I can tell you it pays back in dividends. It's just front loaded.
Yeah, appreciate that. Get to one more here. It says, what are the group's thoughts on the use of contingency contracts or contingency agreements? And then it says, does Daniel or Dustin use them? Daniel, if you want to start first, and then Dustin, if you want to follow up with that.
Yeah, absolutely. So we do use them. I can tell you kind of like a non-compete. I think the likelihood of you ever going to litigation and winning and actually getting paid is probably low, and it's probably not worth your time. To me, it's much more about getting a commitment from your customer, right? It's about coming to agreeable terms and solidifying the humanity of, I'm spending my time, my energy, my resources. I'm working for you for free. If I can work out the details with the carrier, would it be fair that you award me the roof if I can work out those details? If they say yes, okay, great. Here's our document that's saying that you're responsible for just your deductible and any chosen upgrades. This allows the carrier to communicate with me. Sign right here. I think it's much more about setting expectations more than it is about litigation or cancellation fees.
We do use them as well. And we actually have one in litigation right now. It was a $1.3 million job, and we got it approved. Actually, it went to a PA. We ended up getting it approved, and then the guy, flaked out on us. So let's hope that's not true, Daniel. We're gonna find out.
Well, I think on a project that's that large, for sure. Like, I mean, you definitely want to have some sort of agreement in place because you're putting in a lot of time. But I kind of have a different take on this. So we teach during the boot camps a lot of times. We have one of the main things that I focus on is preparing your customer from the front end, and we provide so on our supplement boot camps, I provide a letter that we encourage contractors to use, that they actually email to the homeowner, to the policyholder, and have the policyholder send that letter to the carrier directly. And the letter basically states, it's basically going to ensure your O&P, and it's going to basically lay the groundwork with the policyholder and the insurance company, telling them, hey, look, we chose this contractor. They're not telling me they chose them. They're telling the insurance company, this is who we chose, and this is why we chose them, and this is what we expect you to handle with them. And what we found is that what you find with that is, number one, you're going to weed out your customers that are really not really sold out to your process and to your company, because they're not going to do that. So you're going to qualify them instantly. And number two, when it does come time for O&P and for everything else, and David, correct me if I'm wrong on this, but since the communication came from the policyholder to the insurance company, not from us contractors to the insurance company, because we're third parties, right? So if an insured sends if an insured sends an insurance company a letter that says, we expect you to use this contractor, this is who we've chosen, we expect you to pay them O&P, we expect you to handle the claim in this manner, and the insurance company, and in the letter it says that they have 3 days to respond in writing if they disagree to any of this, right? And if the insurance company refuses to respond or doesn't respond to them, and then the carrier refuses to pay O&P or decides to not handle the claim properly, would that be bad faith?
Depends on the state. So
Correct.
every state's different. Every jurisdiction's different. Indiana, I've had an attorney opposing counsel in court say there's no such thing as bad faith in Indiana. And he's one of the most well-respected defense attorneys in the country. And I can't say he's wrong. So every state's different. Like, for instance, Indiana, there are 2 tests to get to bad faith. First, you got to be able to prove they misrepresented the policy, they delayed policy proceeds, they misrepresented what you were qualified for, all of that. And then you have to prove that they did it intentionally.
Well,
Right.
yeah.
And that's the hard part, the intentional part. But
if the homeowner's done that, though, sent them a letter,
sure,
it's in the file,
sure.
and the insurance company refused to acknowledge it, but yet they put it in the file, which they did on their end. And the reason I say is because a lot of times contractors get into the bad faith situation when they really have no leg to stand on, because they're just contractors. And
well, the catch is the policy. What they'll clothe themselves in is, one, they're just idiots. They'll look to that. So I didn't know any better. I didn't do this intentionally. But then they'll turn around and say, yeah, they sent us that letter, but they didn't invoke appraisal. They didn't send us a proof of loss. They didn't do either of those things. Because they didn't do those things, we haven't committed bad faith. They can say whatever they want, but we were just in the process of negotiating the claim in good faith.
Well, I know an appraisal. I've had contractors send that letter and then go ahead and appraise the file, and I'm the appraiser on it, and I knew, it was there. I asked for it. They acknowledged it. Now the opposing appraiser has no leg to stand on, because they're like, hey, you guys knew the O&P was coming. Why are we fighting over O&P?
Sure.
And so we use that versus and personally, if I'm going to go out and sell a roof tomorrow, I'm going to use that over a contingency all day. Because now I know, number one, I know exactly what that homeowner's intentions truly are. And number two, they're telling the insurance company, we expect you to use these guys, period. And then I have them CC that to me. And that to me is so much more valuable than any contingency I could ever get. It's on a small claim. Now, on a claim like Dustin's that he was just talking about, a $1.3 million claim, I think there'd be a whole lot of paperwork signed before I do that one.
Yeah. David needs to draft that. We've got one we use on commercial. John, one of the things I like about that letter that I just thought of is when the homeowner is putting the carrier on notice with the name of their contractor, that is going to help eliminate, we're seeing management repair programs just skyrocket, right? And carriers trying to sidestep the contractor and putting them in a program. So now when the carrier, or when the homeowner or the policyholder puts the carrier on notice with Gladiator Roofing is my contractor of choice, if they introduce an MRP program, that would be tortious interference, right, David?
It could be. It's all depending on whether they intended the insured to breach their agreement. I mean, you can't sit there and say, well, I've got a contract with somebody. Well, we're telling you not to use that person. I mean, if it gets to that level.
Well, if they're introducing someone new, that's what they're saying.
Yeah.
Basically, yes.
Yeah.
And it's imperative to always get that stuff in writing. We're not always going to be able to recruit people, which would be great, but we can't always do that. So the best way to do it is say, if that's your formal position, please submit it to me in writing. I want it, the insured has to say this and say.
That's in the letter, I think. Dave, you guys drafted this letter for us at some point. So maybe, I don't know.
Guys,
it's a balance.
Guys, I appreciate this. I've failed at my job of being a good moderator and keeping this right at, an hour. But it's just really good content. Yeah, I really appreciate everybody's insights. Everybody, there's a large chunk of people who will have stayed on to hear this. So really appreciate their time as well as your time. So Daniel, David, John, Dustin, Thank you for joining us. Really appreciate it. I'd queue up some outro music, but I don't have that luxury. But appreciate it, guys. Have a great afternoon. Thank you, everybody, for joining us.
Yep.
And we'll see you again.
Well.
All right.
Thank you.
Guys.